Ladies and gentlemen, we are back. So, we promised last time we were going to show you the options chain. We've been talking about the wheel strategy and a very popular income strategy on what you can do with your investment account to actually make money every week, every month, and not just the growth of shares or the movement of shares via up or down. The popular ones you guys have seen back and forth so far has been NVIDIA. I've been showing you guys what I'm doing with NVIDIA, and that's on the YouTube short side. Uh, right now, we're going to use a different one just because NVIDIA does have earnings next week at the time of recording this. So that will skew things, but at the end of this video, that should make sense as to why. So, Mike, what are some key points? We're going to go over the options chain. I for sure want to go over Delta, but want to get people comfortable with it. What are some you have to know, or please take this away from the video points?
Well, that's a good question. I think the overall thing that we need to get from this video is how underwhelming the actual option chain is. It looks more menacing than it is.
Mhm.
When you look at the Greeks and open interest and volatility, I think what you want to do, or I think what the takeaway is, we simplify it so people aren't overwhelmed by all the data there.
Okay. So let's jump into it. We're gonna use Palantir as the example because we're both in Palantir. We both really like Palantir, and it's already up. Okay, so looking at it right now, everyone sees a whole bunch of numbers, a whole bunch of this is shaded, this is not shaded, but down here it's shaded. There's this situation. Then there's all these columns, and Mike just touched on it too, as far as things looking scary. Let me grab mine. All right, so all of this at the top, probability of in the money. Then we have volume, open interest, gamma, theta, vega, delta, probability to touch, bid, and ask. And I can tell you right now, we can delete almost every one of those. Probability to touch, a lot of option chains don't have that. It's irrelevant. Vega, just go real quickly. Vega is just volatility. So as volatility goes up, that specific contract, let's just go right at the money, 2 cents, which means if volatility comes in, that contract's going to go from 98 to $1, as long as my math is right. Oh shoot. One
Uh-oh.
second, guys. White
There we
screen. Sorry, that was my drawing board. Meant to get rid of that. Just to really confuse everybody, Theta. Theta is what everyone talks about. Theta gang. You've probably heard that. That's just time decay. Really,
Yeah.
all that is. And we're going over all this. And if you're over here taking notes, thinking, "Oh my gosh, we're already in way over my head," I'm about to delete these columns because they're data points. They're there, you just won't use them. Like it's cool, won't use it. Gamma. Once you understand delta, you'll understand gamma. Delta, which we are going to get into, I'm going to spend a little bit more time on that one. Here's your delta column. Gamma. If delta is the gas, gamma is the nitrous. That's all. It'll make sense later. Right now, again, not needed. So we can just get rid of that. Now, actually, I'm going to go ahead and delete these columns right now because I'll show you guys everything you just need. We're going to remove that item. Volume, open interest. We are going to talk about that. Theta, don't need. Why? Why does it matter? You're not influencing it. It doesn't change. Vega, it's volatility. You're not going to. That's a very hard one to predict. Probability of touching. As a trader, I can tell you every YouTuber is probably wrong playing the numbers game just by looking at probability of touch, but we'll get into that later. Volume, open interest, delta. These are a must. So jumping into the options chain, what we have here is more numbers.
Yeah, I think let's start at the beginning. So
Mhm.
let's go strike. I'd say let's start with strike price and expiration date.
Yeah,
Like
first we have to pick an expiration.
right.
So everything they're seeing here, we have August 23rd, August 30th, September 6th, September 13th, September 20th, and so on and so forth. And you see these are called weeklies. A lot, if it has options, it has monthlies. The more popular ones will have weeklies. And now you've gotten into like SPY, QQQ. They have dailies, which means Monday, Tuesday, Wednesday, Thursday, Friday, expiration. And as far as the options contract, it's a contract for 100 shares. This is the closing date. We talk about shares, and this is collecting rent and all that. This is that contract. This is again where it expires. If you enter one, this is like a house. This is your closing appointment. We're gonna go sign the deed. Whether you're still in it or not, because every time I say that, someone's like, "You don't have to hold it to expiration." I know. Okay, like these will fluctuate as the stock goes up and down. And yes, whatever you buy, you can still sell to close and get out. But for what Mike and I do, and what I'm usually doing all the time, is selling the weeklies. So we'll pretend it's Monday, right? And so I want to sell Friday's expiration. I want a full week of rent. So that would be August 23rd. So we're going to open that up. So every one of these is the contracts for August 23rd. Everything on this side is calls. Everything on this side is puts. That's it. So for now, we're going to pretend you own the shares. We're going to work on one side of the wheel. You own the shares, and you're going to collect rent. You're going to sell a contract against those shares. So we are only going to focus on this side right over here. This is irrelevant. All of these are August 23rd. Next, like Mike talked about, the strike price. You own Palantir. If you've been following my channel, you bought it with me at 10. You got made fun of by the internet because at $10, it was overbought and it was going to tank. Anyway, now it's at $32, and it hasn't ever gone back to 10. So it's awkward. Anyway, listening to people that do know what they're talking about. Let's say you bought it at 10, and you're fine with selling your shares at, let's say, $35. Why not? It's 3.5 times your money. That sounds good. I like that. So here's a $35 strike right down here. I guess I got to get my little squares back for this. $35, August 23rd. You're telling me, hey, I don't mind selling you my shares on August 23rd at $35. So you're going to sell that call to open for what we're doing right now. And what I'm going to do is I'm going to pay you the origination fee for that contract. Now, here's the bid and ask. Hopefully, I shouldn't have to explain that. The bid is what someone wants to pay for that. The ask is what someone wants. Like, I want 3 cents, but someone's saying, I'll give you 2. This is 2 cents per share. So times 100, $2. Not the best. We'll get into why this just would not pan out. But what do you want to add before I just run away, Mike? Am I going too fast? I don't want to scare people off. This is supposed to be like the intro. Get them used to it. Get them working.
No, you're doing just fine. Can our pictures be moved over to the other side since you're working on the call side?
No, I've thought about that. We can do we can do this. We can get up here.
There we go. We go.
We could center it up. Let's okay, so we've gone over. I really want to take it slow. We've gone over the expiration date.
Yeah. So all those basically all those are the same expiration date because we picked the expiration date first.
Mm-hmm.
And then each of those are the strike prices of the different contracts, all of them ending the same week.
Right.
Yep. Okay. We're good.
Where do we kick it off from here? This is where I struggle because, like,
I can tell you what I can tell you what I do next.
Okay, let's go there.
I immediately go to the delta.
Okay,
and I start scanning for a specific delta because it's the way I trade, and I'm looking for a 0.20 or lower.
Okay. I don't have to, but if it's something brand new, the first column I go to, I consider this one whole column, the volume and open interest.
Okay.
I'm also doing it this way because we're going to spend a little more time on Delta. Volume, just right here, how many contracts are being traded that day? That day. Open interest, how many contracts were held overnight? So traded yesterday, the day before, ultimately being held and still open. Because I can buy to close, 10,000 times, and then that's, I don't know if there's a skewed number here. Here's 17,000 on the volume right here. Yesterday was 16,000. 16,000 held. Now tomorrow, and this won't be the case, but maybe all 16,000 got out, 1,000 others came in. Tomorrow that could just say 1,000. So I do like to look at this. And first of all, if it does not have a comma in it, I just think that's a little low. And just think, if you're playing the in and out game, you got your basket of fruit and you're at the farmer's market. Do you want 20 people there or 20,000 people there? If you have to sell, your life depended on it, which group do you do? Is it a lot easier to sell to 20,000 people? Is it a lot easier to find your buyer in there or seller versus, the smaller it gets, the harder it's going to get.
Right.
And it will just be you and the market maker.
Right.
Everything I trade and do, I don't really have to worry about, because the reason I trade what I do is volume is just not an issue with those. So I don't have to worry about that. But for somebody who's just, new, like, hey, I found this ticker, what can we do? Because a very popular thing I've seen a lot of people do is they figure out this wheel strategy and it clicks. It's the end all be all. It's all they're ever going to need. And you could work it that way, but they try it on every stock, and you'll see this does not fit for every stock. It
Yeah.
fits well for what we do because of the things we trade.
Yeah, and I'll add, when you're new, you tend to find stuff with high premium,
Mhm.
but there might be 5 contracts trading.
Mhm.
So trying to get in and out is very, very difficult on something like that.
Yeah. Yeah, it won't happen. And
Yeah.
you'll see this bid and ask over here. Again, what somebody wants to pay for it, what somebody will sell theirs for. And you'll see that start to really spread out.
Yeah.
'Cause people just won't agree. They won't jive.
Yeah.
So let's jump into the important one, the big one. This is the one everyone should know inside and out. And this is the one I love to make fun of other YouTubers on, because they have the same definition over and over again. So let's go right here at the money. And that's what this shaded area is. If you'll notice, we are at 32.50. So 32, yeah, 32.54, we're pushing up after hours. 32.50 right here is technically out of the money at the time of closing. $32 is in the money, which just means below the actual price. That's all it is. That's all this shaded area is. And an options contract is time value plus real value. We talked about theta. We kind of breezed over it. That's that time value, that time decay. All of these have a week's worth of decay on it, whether it's in the shaded area or not. So this is one of the things that was kind of your aha moment, when we talked about this a while back, was don't worry if it's in the shaded area. Big deal. Like out here in the not shaded area, if we hit that expiration date, we haven't hit there, that's worthless. Why would anybody want, again, the example we used, my shares at $35. Why would anyone want it when they can go to the open market and buy it for 32 and it'd be cheaper?
Right.
No, so that contract will expire worthless. So nothing to worry about as far as that goes. All right, so Delta, and whatever YouTuber will tell you, let's just get it out of the way. That contract, if Palantir goes from 32.50 to 33.50, this contract's going to move. If you were in the 32.50s, the contract would move 50 cents, which means it would go from, where are we at, 50 cents to 52 cents to $1.02.
Right.
That's it. And then they just leave it at that. That's it. Like, that's what it means. And then they just move on to the next. And they're leaving so much room. There's so much data there missing out. And this burns me every time somebody says that, because who cares about that? There's so many more ways to look at this, ways to read it, things it is telling you. Why I can instantly tell you that contract you just bought is crap. And again, this is playing the numbers game. I don't want to hear about somebody's one-off that made it to Instagram, because I call those Instagram trades. And what that is, because if we just talk about the Delta right now, Delta, you'll see at this shaded area, it's a 50, give or take. It's a 50-50 chance of it expiring in the money or out of the money. That means that stock could go up or down.
Right.
And you got a 50-50 shot. Now, the 35s that I mentioned earlier, that's a 4 delta, which is a 4% chance we make it that far.
Yeah.
Which means a 96% chance that's going to fail. And those Instagram trades, some nerd bought that 4 delta. And I tell them all day long, like, that's a dumb trade. But it pops off, right? You know, it's like the same guy telling me he goes to the slot machine and that's his income. And I say, well, that's kind of silly. And he says, but last week I hit the jackpot. Sweet. Do it again. Do it 3 times. Do that 3 times out of 100, and I would be impressed. You know, that would be a pretty great track record. Numbers game, and everything Mike and I talk about is, let's take this trade over the next 1,000 trades, 100 trades. I don't care about the one-off.
Yeah.
Again, and I use this example all the time, the slot machine. It's amazing because slot machines, they do pay jackpots. Maybe you saw someone. Have you ever hit the jackpot? You know, how many times did someone pull that lever, crank that button, go open their little coin purse, and sit in there for hours, not do anything? By the time that slot machine paid that jackpot, it doesn't matter. Again, that's why we talk about the numbers game just in general. So now Mike mentioned he likes the 0.2 delta. Now, which one would you pick right here? Because we have the 0.22 or the 0.13. You going up, down? How are you? What if there isn't a 0.2? Because the 0.2 would be an 80% chance that it expires out of the money, right? 20% chance it does. Now that's the number. That's also where I'm at. I just like those numbers. But what do you explain in this position how you're picking the 22 delta or the 13 delta?
So, like you said, I'm using delta as a percent chance of that contract I'm looking at expiring in the money.
Mm-hmm.
Right. So I'm trying to give myself a decent chance of it expiring out of the money while measuring that versus premium, right? Because premium, as the chance goes down of it expiring in the money, so does your premium. Right. So I'm trying to always balance those two things, right? I want to make sure I'm making the trade more in my favor, but also collecting as much premium as I can.
Right.
So the 0.20 is a guideline that I use. It doesn't necessarily mean I'm going to always do 0.20 or below, but it's my starting point. It's where I start looking. I look at the current trend of the stock. I look at, you know, if I happen to be talking to you, I'll see where your zones are. But it's a good starting point for me as a good reference, just to start. Okay, is it even worth it on some stocks? Because sometimes the 0.20 delta isn't worth it at all. You might collect $3 if you spend $1.50 on commissions. Like that doesn't make any sense, right?
Yeah. So by the time you pay taxes, you're a dollar out of this thing.
Yeah, exactly. So that's kind of that's how I use delta. It's more of a guideline, not a hard and fast rule.
Mm-hmm. Yeah, mine are, ultimately I do like the zone. So if I can put it above the zone, and I like how you said it's a starting point. But I also it's also a gauge for me. You know, how bullish am I? Like, hey, this thing's roaring up. Let me dial this thing back a little bit. I want to give it more room, because if I think Palantir's shooting up right here, the 22 delta, that's a 33.50. That gives us $1. Versus we go to the 34, the 13 deltas, it's got to move a whole extra 50. Now on a $32 ticker, that whole extra 50 cents, that could take a whole day. And if we're talking weeklies, there's a five-day opportunity. 1 day is a lot of time that people don't really consider.
Right.
So if it's just absolutely ripping up, then I'm thinking like, hey, dial it back. Yeah. If I think we're already overbought, like this thing's going to snap down, we're not even walking on eggshells. We left that a while ago. Right. Then I could probably afford to do the 22 delta. that
Mhm.
does, come with a little bit of experience of kind of looking at the charts, kind of seeing where we're at and understanding its normal movements. I certainly probably wouldn't be able to pick that out on a brand new ticker I've never seen. Um,
Yeah,
but yeah.
that's exactly right, right? Like, you're using your experience to know where you can and can't move that up or down.
Mhm.
Um, for someone new, I think, picking that 80 that point 0.2 delta or below is a very
Mhm.
good spot, because basically you take 100 trades, you're going to win 80% of them.
Mhm.
So that's kind of a good measurement to start if you're brand new.
Yeah, there is a red flag too, because someone just thought, and I'm sure someone watching this is thinking, "Well, holy crap! I don't mind collecting $1 on every trade. I'll just do 100,000 of them." Like that's fine. I'll pay the commissions, I'll pay the taxes, and still make $1, and you're good. Um, but the problem is, and why I think the sweet spot for me is that 20 delta. If you're gonna just YouTube the wheel strategy, because maybe you just didn't get it all from us, a very popular, what most people do is sell the 30 deltas. I mean, hard
Mhm.
and fast.
Yep.
30 deltas, I'll sell that, but that's a 70% chance.
Yeah.
Like that starts to flirt with you're going to be in what we call management mode a lot. Like I like to just I like to collect a little bit less, bump that strike up a little bit more, and then just not have to worry.
Yeah.
Obviously I'm checking things. I don't want to make it sound like I'm just careless. There's a lot less management just between the 30 and 20 delta.
Yeah.
Um,
Yeah. So I've noticed the same thing, right? I've seen a lot of wheel strategy videos,
mhm.
and you and I do mostly weeklies. They'll go out 45 days and sell the 30 delta, and
Yeah.
that's just too much management for me. Like, I want to be in and out within a week and not have to look at it.
Yeah. And when you're 45 days out, you still have to manage it every week. And there's even times I've done it. It's very very rare. But a popular thing. Let's talk about the 35s, and then actually wait before we get to that. Let's talk about the one red flag. Um, you're going to go ahead and sell the two deltas. 98% chance you're right. You're going to collect that $1. The problem is what I told you about that slot machine is by the time the jackpot has been paid, it's collected enough to pay it. You go too far out and run yourself too thin, those one or two losers will wipe out not just your last set of 98, but the next few of 98 right behind it. So you got to be careful. Assuming you're going to go ahead and take that loss, the jackpot gets paid, and you did it incorrectly. Um, that just be there is a point, there is a happy medium where you're just not collecting enough. Now Mike and I don't actually let our shares go. There's something with rolling that we're showing as examples, but just to go over that, to fearmonger some people, there is you don't want to just get that let me get greedy, but tweak it this way thing, because that curveball's coming in hot.
Yeah. Yeah.
Okay, so the 35 delta, or sorry, $35 right now, 4 delta, 2 cents at the bid. Okay, and then we can go 45 days out. We have 37. Let's go October monthlies. 58 days out. 35 went from 2 cents to $151. So, but it's also a 40 delta. What you did was you gave somebody, and what I don't like to do is give them time to be right. I like it when the gamblers show up and they're wrong real quick. My slot machine does not sit there and spin for 10 minutes.
Right.
We're gonna figure this thing out right now. You're wrong. Try again. Better luck next time.
That's right.
Like,
I've
uh,
col I've collected your money, now try again.
yeah, exactly. Like, we're not hanging out.
No.
And that's the thing is it's 45 days. Not only are you 45 days out, you'll notice things move a lot slower. So that stock just shot up or shot down. That's a lot of time still left for things to reverse, and the options market know that. These are very efficient markets. So, yeah, it could have a bright red day. Let's say Palantir is 10% down. Now, that 35 contract we sold for $2 smoked. I wish we used a better one because 2 cents to 1 cent is nothing. But largely, we're probably in the beginning of the week selling. It's a $21, $22 contract on Palantir. Palantir has a 10% down day. That contract is now worth 2 cents. Okay, so we're 98% in the green. We can buy it back and close it. That 10% down day on an October 18th expiration, the contract's just a little bit red.
Yep.
Now, dollar-wise, you might even be pretty similar to what I just clicked on the weekly, and that's the argument. And I've heard people's arguments, but it just doesn't pan out that way in real life because someone's going to say like, "Hey, you're up 20 cents." On that same day, I'll be up 20 cents. It'll go from $1.51 to $1.31, so same money. Uh, I get it in real life. I just haven't seen it. It's one of those things like you could teach it in a book, but just don't see it in real life. And then you're just managing so much more. Not to mention, is there an earnings in there? Is Vega creeping up? You're going to give all this extra time for other options to really jump in and really throw a wrench in the gears and mess with that.
Yeah, I think by choosing this week's expiration, that kind of distorted it a little bit because there's only have 2 days left or whatever.
Yeah.
Yeah, probably should use next week's, but that's okay.
Well, let's do it. So we'll pretend this is next week's right here, 35.
Say it's Friday or say it's Monday.
Here's the 17 deltas, just like I told you guys. I'm just shy, and mine are always usually in the teens, right at 21 cents.
Perfect. That's actually a great strike price right there.
Yep. And so we got the 17 deltas. If you said, "Hey Don, looking for some advice," I have these shares sub 35. That's important. And I'm going to sell the 35 strike shares. It's the 17 deltas. I'm collecting 21 cents. I'm going to ask you, what do you need my opinion for? That plan is as solid as it can get. There is no opinion other than I might do it too. Like we're in the same boat.
Right.
Now you tell me, hey, I'm selling the 35s for October. That's a 40 delta. You're going to collect $1.51.
Yeah.
Like, sweet. The other argument there is, okay, so we have 1, 2, 3, 4, 5, 6. So if you sold that 21 6 weeks in a row, you would end up being at, you'd be just shy of 151. So you're not missing that much, but the kicker to this is I get to move my strike around, and oftentimes I'll make more than this. Let's say Palantir just does not go to $35, and they all expire worthless. This guy collected $1.51. I did 35 every week going into that. Now, if I kept it at 35, Palantir pushes up. That 35 is going to be a 60 delta, 50 delta over here. It'll be the same thing for me up here. So I will collect more at that time. So if I want to keep my strike the same, I would still select the weeklies. But what if Palantir has just an awesome time? So let's say August 30th, Palantir is expiring at $34.50, $34.80. We're right at that $35 mark. Mine's going to expire worthless. I'm done. Come Monday, I now get to sell the 37s, the 38s. You're still in the 35s, getting ready to get your shares taken away.
Right.
So I get to move my strike as the market flows to where this one, you're kind of just sitting in there, twiddling your thumbs, and that's that. I guess you could still manage it every week, but
yeah, you're kind of stuck, right? Like you're in it. You're in it to win it at that point.
Yeah. And to the people that say I'll do that, but I'll still manage it every week, I still collected more because mine dies. Yours still has a lot of what I call what if value still left, so it doesn't pull back that much.
Yeah.
Now it still decays. That's the column we deleted, by the way, that theta. Theta is how much that contract's just going to go, in theory, go down per day. And that's your time value. That is the hourglass turned upside down, ticking away. Doesn't actually matter. Just know that the next day it may or may not kick in. That's the awesome part. A lot of people don't know. Theta's not every day. Yeah, probably blowing some people's minds right now. But anyway, it's just an algo. It's nothing you can change, intervene. It's the same thing. Did we confuse everybody yet? Have we kept? I feel like we've kept it pretty simple.
I think let's just do a recap, right? Step one, pick an expiration date. We use weeklies.
Yeah.
We use weeklies, but that doesn't mean that's what you have to do. But pick your expiration date. Then use something to pick a strike price, but have some reason why you're picking a strike price, not just picking it out of thin air.
Right.
And it's that, as far as I can tell, it's that simple. I mean, really, those 2 steps.
Now, if you are not a chart person, you don't believe in the chart astrology. There's always someone making fun of it, and typically they don't know what they're talking about. Just kidding. Let's say you just don't know anything. What I just told you earlier, the 17 deltas, the 18 deltas, it's like the 15 to 20. It's somewhere in there, depending on how many days are left. Honestly, if you just came in and said I'm taking that trade, numbers game, you're gonna be right probably 8.5 times out of 10.
Mhm.
So regardless of zones or anything else like that, that's going to pan out just fine. Using some of these other things, you can fine tune it, collect a few bucks more here and there, avoid management. Like my zones. I'm not bragging. Way more often are they right than they are wrong. So having my sold call strike price above my zone, I don't care if it's 110 delta. I just think that thing's going to reject and come right back down. Uh, just to confuse you guys, there's actually no such thing as 110 delta. It's just joking. Um, but I have a little more confidence in my zone, so I might just bump it up and think the 30 is okay because I
Yeah.
assume we're going to reject and we're good. But without that, if there was the thing that sucks is as far as the stock market goes, one of the indicators I tell you guys like, hey, that's probably a scam to look out for is when someone says follow these rules. You can't put rules on a strategy. Like, you can't put rules on the stock market where it's just human psychology and emotion. That's not a rule based. That doesn't accept any rule based stuff. There's things to look out for, but there's never just if you see this, do that set of rules, or we would not not have to worry about paying back our student loans. Everybody would just do that. That'd be it. Um, okay. So one thing I did want to go over one more again. We haven't gone over this deltas. I do say this a lot. And you guys have heard me say this a lot. Deltas are everything. By the way, your shares that you own are hard deltas. Options deltas are soft deltas because they move. Because when Palantir goes from 33 to 35, your this delta goes up. It goes from a 36 to a 44. That's why just think soft, malleable, they move. Shares, uh, inevitable, I guess, hard. I don't know how else to put hard deltas. If you're ever looking to hedge, if you wonder how market makers are at a neutral delta, they're all looking at the delta. Let's say you're in 462 different stocks out of the 6,000 that are out there. You can look at your whole portfolio and see if you are long deltas or short deltas. You'll notice here on the put side, we're assuming you're going to buy the calls, buy the puts. These are negative deltas, which means you are short. So if I were to buy 100 shares and then sell a 35 call, that 35 call is a 21 delta, but I'm not buying it. I'm selling it to open, which is actually a negative delta. So I'm actually positive 83 deltas overall on Palantir because these deltas essentially are how many shares you're controlling. So that's why if you're looking to just buy a call because you want it to go up, effectively, if you were to buy this 35 strike Palantir, you're controlling 17 shares. And if I wanted to buy 17 shares, it would cost a lot more than $21, seeing how each share is $32.50. But if that's all I wanted, then I could spend $21 and get the same effect. I just have the hourglass tipped upside down on this one. So it's going away. Hedging, all you're looking at for, we're hedging, neutral delta, everything. You can just look at the deltas. Pelosi, everyone knows Pelosi and her trades, right? She doesn't buy shares, she buys options. And you'll notice they're deep in the money. If you notice this right here, this is kind of a fluke. The more in the money, the higher that delta is. Every options contract, and I do mean everyone, is going to expire at 0 or 1, which that 1's going to look like this, or that 0 is going to look like this. There's a 0% chance it goes to 46, about 100% chance, loosely, that it's going to 19, or going to be above 19. So what Pelosi's doing is she goes deep in the money for like NVIDIA. Here's the 25 strike. Now she spends $750 to buy effectively 95 shares. This is called a synthetic long position because you're long 95 shares, but you didn't just crank out the almost 3 grand. Actually, it would be 3 grand to get 195 shares. So you can get the same movement, same up and down movement as the shares, spend a whole lot less. It's just a little bit more capital efficient. But again, you have an expiration date. See, the only difference that's the trade off there. So see, I don't know how to do like the basics like everyone else does. Hopefully, I didn't talk everyone. That's as basic as it gets. Like that's also everything.
Yeah.
That's it. You know it. You're good to go now. Like that's you should at least be able to speak fluently like that. But then once you do, the all of a sudden it's not so scary anymore. Everything's good.
Yeah, the chart, like we started out saying, it can be overwhelming, but it really isn't all that much. It's if you pare it down step by step, expiration date, strike price, then you can get into the other things about it and figure out what those mean.
But realistically, why do I need to know what the theta is?
You don't.
Yeah, and who cares about gamma?
And then really, I really don't care about rho.
Yeah, because what everyone doesn't know is there's different levels to the Greeks. There's 22 of them actually. Just the more popular ones are the ones I had up on screen.
Yeah.
But just to go over what gamma is, because I told you guys delta is the gas, gamma is the nitrous. There was a little number over here on if the gamma column was still here, it was like 2 cents right here. So when Palantir moves $1, this contract right here is going to go up 52 cents. And then gamma is going to kick in. So that 52, whatever it is, let's just say it's 8. When it goes up, when Palantir moves up $1, the contract goes up 52 cents, but then gamma gets added to delta, making it the 60. So that's all it does. Is each time it moves, gamma is what moves the delta, like the delta moves to the underlying. Again, cool to know. If you couldn't answer that, then I certainly don't think we could be having a full. I wouldn't listen to anything else you have to say if you're trying to teach me options. But at the same time, could you run a wheel strategy and sell some calls, collect some rent without ever knowing what gamma is?
Yeah.
100%.
And I think that's the point. I think the point is you can run the wheel strategy without knowing 80% of what we're discussing. If you can get expiration, strike, delta, if you get those 3 down, you're set up to start running the wheel.
Yeah. Now, before you just go cranking this thing out, we mentioned management mode a couple times, and I said it's important that it's above your strike price. If you want to never lose, then it's above your strike price or above your cost basis every time. If I own Palantir at 40 right now, selling that 35 all of a sudden gets a little bit more risky than the 17% chance. They get the S&P inclusion, shoots up to 40. What I just agreed to was to sell my shares at 35. What I actually just agreed to is a $500 loss per 100 shares. Banging. But let's say you own this thing at 10, whatever it is. Let's say you own it at 34.50. But the 35 deltas still, or sorry, the 35 strikes still at the 17 deltas. You heard me say that, so you're good to go. Your worst case scenario, they get the S&P inclusion, rocket that thing up to $60. You bought at 34.50. You sold your shares at 35. So if it was just 100 shares, it's $50 there plus your $21. You still made $71. You can't lose. The only way you lose is by the stock price goes down or you sold a strike price below your average cost. So right now, by owning it below 35 and selling the 35s, your two options are I own my shares and I collect a few bucks, or I sell my shares, get whatever value that is, plus the contract cost.
Right.
So if you were to just keep it at that, never do anything about management mode, nothing. Just, hey, I own it at here. I'm going to sell right here. And that's fine. And if the stock goes down, you just don't sell that week. Let's say Palantir shoots down to 25. Then all of a sudden that 35 strike, for $21 is actually now going to be worth $0. And you you can go to there. There's options calculators if you guys again don't know anything about options, but they're also a waste of time. Going into the options calculator and typing in the strike price and seeing where it's going to go. If Palantir is going to go down and you're in a call, just down $5, go up $5 right here. It would go from 21 cents to 2 cents. That's it. And if Palantir were to go from, let's say Palantir goes from 32 to 37, and you're in the 35 strike, that 35 strike is going to go from 21 cents to $2.73. So that's all it's ever going to do. I mean, front and back, that's everything you probably need to know about the wheel strategy. Not the wheel strategy. Let's just stick with as far as calls and deltas. You could probably piece it all together. There's still some more, but we tried to keep it as basic as possible on this one. I want to make sure nobody loses. Because again, how people lose is, let's say Palantir sells off to, I'll finish what I was going to say. You own Palantir at 32, thinking whatever, I'll buy it at 32. I'll sell at 35 right now. I'm fine with that. It's $250 plus $21. Bing, bang, boom. But you buy it at 32 and it sells off to 25. And then you're thinking, that sucks. So you go sell the 17 deltas again for 21. But what did I say? $25, so we're $12 down. So that would put your. Hang on, we got to go. I hate going backwards. Okay, so if it sells off to 25, your 17 deltas will still be 21 cents. I'll put that way. It's just going to move it around. This will just move around.
Just the strike price will be lower.
Yeah, exactly. And that's what I was getting at is, yeah, I was right. Okay, it's not going to be up here. So let's go $12 down because that's what Nvidia's or Palantir is going to sell off to, right? It doesn't get the S&P inclusion. It sells off $12. Your 17 deltas are now at a 20. Yeah, that's not even there.
Close enough.
No, hang on. If it sold off to 25, it would put your deltas. We got to go up this way. Hang on. I know what I was doing wrong. Overthinking everything. Just at the money, right? So we can go 1, 2, 3, 4, 5, 6 strike prices down, and this is ballparking, right? It goes up to 25, right? So 1, 2, 3, 4, 5, 6. You're selling the 28. You're going to sell the 28 strike for $21, but you told me you just bought it at $32.50, and that's how a lot of people get in trouble is they lock in that loss.
Yep.
So if the only thing you ever took from me was, okay, here's what I'm going to do. I'm going to go look at every 100 shares that I have, everything I have in batches of 100. And then I'm going to sell the 17 delta on it, provided it is above what I own it at, then you're good. There is a no-lose scenario there other than the stock is going to do what it's going to do, whether it goes up or down. Hopefully you pick the right one. There is no losing. It's just, again, what I call free internet money every week.
I think that's one of the struggles that some of our membership folks have, right? Is they're so used to the weekly income that if this scenario happens, they're very disappointed when they can't earn that weekly income. It's like it's like kind of devastating. They've gotten so used to the income, and people used to just own stocks, and they were happy with just owning it. But now that they've found the secret sauce, they're like, what happened to my income stream?
Yeah. Yeah, and you can't. But how often does that happen? We just went on 18 months without a correction, and we just saw one. We've been on an 18-month just gain train. While stocks have gone up and selling out of the money calls to all the gamblers, we've grown value in our stocks. Again, I've sold calls on Palantir almost every week. The only thing I don't sell them on is earnings weeks. And same way with Nvidia. Because I don't want it to shoot up and then I have to let my shares go. But yeah, you just keep feeding the gamblers, like just taking little breadcrumbs and birdseed to the birds and the geese. That's all. You just feed them. You just keep them around. You want to bait them in a little bit. It's like $1 on the end of the fishing line. But yeah, in terms of volatility, there's windows where you'll probably back off because there's no such thing as a home run. If you think there's a home run and you're trying for it, I promise you're probably about to take a loss. In this strategy, this is an income strategy, not a trading strategy. Um, so it is very consistent outside of the windows of volatility where the VIX just massively shoots up, and then all of a sudden it just throws a wrench in the works, and you're like, hang on a second. Uh, it's very easy just to I don't go on autopilot on this, but
Yeah,
psychologically just kind of go on autopilot. Like, I'll just keep collecting my income.
it is.
Uh, I can tell you, for me as a full time trader, this is amazing because it use the stress levels from I have to trade and perform every week or every month, right? You can have red days, red weeks, but red months you're dipping into savings. You don't want to pull out of the market when it's red. Um, Doing this, if there was something I could ever go back and change, it would be like just learn this day one. Because there's plenty of times in the beginning where I just had shares, and I'm like, yeah, it's cool watching it go up, but that doesn't mean anything until you sell.
Right,
Like,
right.
yeah, it could fall off tomorrow. So just look at that, get all googly eyed at a P&L I don't have locked in doesn't mean anything. But at least with this, weekly income is different because it is locked in. It is in my hands. For
Exactly.
everyone following along, and they've watched NVIDIA. We bought NVIDIA at 120. It sold off. Now, if you held NVIDIA shares, you watched your P&L go red. The only thing we did was create more work for our CPAs. Hey, I locked in some money on NVIDIA. Locked in more money on NVIDIA. Hey, this time I actually locked in 2 calls on NVIDIA this week. So good luck with that. Anyway, NVIDIA went down, 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 right back up, shooting up. And all we've done so far is collect money on it the whole entire time. So
Pretty much it.
okay. This is unfortunately about as basic as I can get, which is why I like Mike's help. Because somebody did say it was like he's learning Chinese from me, but all I know how to speak is Chinese. So I 100% get it, and I probably failed at the let's just keep it basic so I don't scare everyone off. Um,
So let me ask you this: if people do have questions, where can they go get more information?
from you, not me. Uh, yeah, hit Mike up on Patreon. The Patreon link is the was it Patreon? Is it? I should know this. I think it's donfrancho.patreon or patreon.donfrancho.
Good lord, dude.
The good news is it's the top pin link in the comment. So if you join that, Mike goes live Monday, Wednesday, Friday. I post all my plays in there for like the growth account. So everything's there.
Yeah,
And we're the cool part about that is access to the chat. So
yeah,
just jump in and tag us, ask us. The cool thing is you can just ask anybody in the chat, and they've probably already had the answer from us. But we're there all day. Just jump in and ask us.
yeah.
It's one of the biggest perks there is you can ask us at. I don't sleep, so Mike, I think he does that weird 8-hour thing. I don't. I sleep for 8 minutes a night, so I'm typically around,
We had to work on that.
except Fridays. Fridays I sleep to the bell.
Friday's your sleeping day.
Yeah, yeah. I hibernate on Fridays. Other than that, I'm there. So all jokes aside, no matter what it is, it's going to be the top pin comment on this video, or it's in the description. It'll be in both those places. Just go check it out. And that way, I don't want to say you don't even need to know what you're doing, but you could borrow from our experience while learning. And the benefits of this is it's not like don't worry, you'll get there sometime. The benefits is you made this much this week, this much next week, and I'll just say this right now because the growth count we started at 0. We're about to cross the 10K mark. Now we put in $150 each week, which comes out to like $7,000 something a year. We're about to cross the 10K mark. We have 4 months left. Does that? And then ask yourself, man, does that pay for the Patreon? How many
Yep.
years did that just pay for the Patreon? There's 100 million ways to make that math work. But anyway, I'm not here to sell you on it. I don't typically try to do it, but it is a great resource. I am a little bit biased to myself, and Mike strictly, while I trade and do this, Mike strictly does this for income.
Yep. Yeah. I'm the wheel strategy guy of the group.
So okay, anything else you want to add while we just blasted them with? It was like we brought a fire hose to a water gun fight.
Yeah,
I like to win though.
Yeah, I would just recap. If it's still if the option chain is still overwhelming, don't freak out. Join the
Yeah.
Discord. If nothing else, that Discord is free by itself. We can help you out. We'll get
Mhm.
you there. So that's all I would say.
Yeah, the last takeaway, the options chain, when you open it up, has a lot and says a lot. There's like I said in the beginning, they're data points, but I'm telling you, you're just not gonna use them.
Mhm.
That's
Yeah, I
it.
think I think I think once you strip away everything like you did,
Mhm.
it's not that overwhelming.
Yeah. Uh, car guys will understand this if they've ever modified their car. People that don't modify their car, you guys still drive every day, but do you know if your engine has ARP head studs in it or not? Because knowing that would be like knowing what gamma is. Like, it doesn't matter. It's got the same steering wheel and gas and brakes, so we can go over every part of that engine. The car's still going to drive. So just know that that's a part. Most of you guys probably don't know how to change a flat tire or understand. This just really burns me. So this will be the last. When I see someone on the side of the road trying to jump start their car, or like at an intersection, I'm like, your car died while driving, and you're trying to jump start it. Nope. That's not going to happen because for those guys that don't know what that is, it means your alternator died probably a while back because you were driving on battery power. The only job of the battery is to start the car, and you can do what I did if you want. I had to get my car to a dealership to swap the alternator because you had to pull the engine. I hate engineers, but anyway, we're driving down the road. I told my buddy. Uh, the way
We
engineers like make things fit, like, oh, that's a great idea. Like they're playing Tetris, like, and no one can ever get that part out again without pulling out 46,000 pieces. No, they could. They need to all. It needs to be mandatory that you need to know everything about a car outside first. Anyway, uh, so I had my buddy follow me, and so I started like it's dying. My car died in the middle of the road. I'm like, all right, pull it behind me. We swapped batteries because your car can run on battery power for a little bit to turn all the electronics off. So we start following when that little light comes on that we're low voltage. We swap batteries again. So his alternator is charging the battery while we're driving. We just keep the
Oh
quick
my
connect, and we
god.
just limp that thing the whole way to the dealership. Because I promise, if you guys want to test if your alternator is bad, go start your car and unplug the battery. That's it. If your car just dies out, good thing you watched this video because you are probably about to have it die in traffic. And please don't try to jumpstart your car and get ran over by somebody because you think your battery died while going 70 miles an hour down the highway. Basics, people. This is basics.
Welcome to Wheel Strategy 101 and Automobile Mechanics 101.
Yeah. You know why you should buy a Tesla? Because they don't have alternators. You know what they don't have? Radiator hoses that busted. They don't even have radiators. They don't have oil changes. They don't have anything. So if that was too complicated, then you go buy a Tesla and you live that minimalist lifestyle.
All
Plain and
right then.
simple. Okay. Rant, rant over. Watch out for the people that don't know what they're doing because you're probably going to run them over as they try to jumpstart their car in the third lane on the highway.
Oh my god.
All right. I'm going to wrap it up here. See you guys in the next one. Where I guess we're going to let's talk about how we strive to make how it averages out. You've heard us say it 1% a week, and that's the goal, 1% a week on the options contracts that we sell. That should be our next video. So do make sure you are subscribed for all that, and we will see you in the next one. Mike, any wheel or automotive tips before they go?
I'm good.
You ever wax your car? Wax or clay bar?
I barely wash my car. What are you talking about?
See, basics, and even he does the wheel strategy. See how simple this is. All right, we'll see you guys. Have a good one.
See ya.